Hello, everyone, and welcome to another episode of Idiot Investor. I am your host, Justin Alexander. It's been a while since I've done a video, but we've had a lot of volatility recently, and I thought it was a good time to do a video and get some of that out. Uh, we've been on quite a run since our March lows, and nobody saw it coming until they did. And then once everyone realized that SoftBank was like pumping up the market, that seemed to be the tipping point once we started going down. I assume that was on that day. Let's see, September 3rd or 4th. September 3rd. You see that? Now, maybe that's just the market going down, but when was that news? Who knows? It's been a long year. Can you believe it's already September? Anyway, I wanted to go over what some of the stuff I've been buying, some of the stuff I've been selling. So let's just get into that. I got a little list here. Take a peek if you want, but we'll just start at the top. AbbVie pays a great dividend. Won't go into these for too long, but decently valued. I think fair value is at 100. I think that's going to be a normal here coming soon for AbbVie, so could be wrong, but they're definitely worth that much at 5% dividend. So I bought it like $90, and I'm very confident about that. Airbus, less confident, but I'm just trying to get in there, get the discount on it. So I feel like it's pretty fairly priced at $20. I mean, that's below this. Anything below this, below 2050, I think is a good deal. Because you got good support technically at $18, even though we keep breaking it. So no dividend, you can ignore that because they cut that shit. But there's two airplane makers, Boeing and Airbus. Airbus makes smaller planes, and we're going to need that going forward. So I think they're the better bet. I also think Boeing's a pretty good buy, but I want to buy it at $100. That way you can grow into that $300 valuation, which I think is actually still fair for it. But the market seems to think otherwise. Chewy, my boy Chewy, I'm hoping will be a winner for me. Because I kept saying, oh man, I want to buy this. And it just kept going up. And not saying I bought at the best time. Because, what's my best buy on that? Like 65, I think. And my best was like 55. So I'm looking for $50 to pick up more. Like 50-50 is when I'll buy more. Probably just a share, but I think, look at their earnings. And, people care for their pets, and my parents use it, so that's going to be a big winner in the future, I think. I think people should look into the pet stuff. There's a pets ETF. I'm not saying you should buy this at all. In fact, I wouldn't. I guess I don't see it here. Maybe it's pause. Anyway, there's another one, IDEX, that I thought was interesting. They make, animal. Let's see. Develop, manufactures, and distribution of products and services for the animal vet, livestock, and poultry dairy. So they make stuff and vaccines or whatever. MPW. This is one of my favorite REITs. I think it's a favorite among other people. A lot of volume on it. 6% dividend. Steady increase on earnings. It's in the assisted living, old people, a lot of boomers out there retiring every day, so definitely a good price for at less than $20. AMAT, that was another one that seemed to dip for no reason in my eyes, and look at that, from 65 to 55. So I bought at 55. I think that's a damn good price for it. Especially at 1.5% yield, that's great. Why not? Apple, once it's split, I only had one share. I wanted the increased exposure. Now I wanted another share, so I just bought right away. I didn't care what the price was. The high was 137. I bought at 130. I tried to buy at 125. It slipped away that morning, so I was pissed. So I just bought it, and I'm looking to buy again at $100, so I can unload that 130 share once it goes back up. That's kind of the plan. Yeah, $100. And then the next price I'll buy at is 69, which is my original price for it. Because why would you not buy at 69? 2 billion shares at the bottom were exchanged over a week. That's crazy. Pepsi. I kind of bought too early, of course, on that one. I bought at 133. So, it's been holding that really well this whole time. And then boom. But, Pepsi holds its value, so that one's worth getting. Now I have a pretty much full position on it. I could buy one more, but that's about it, so I gotta wait for it to go on discount if I do buy another. If it got back down to 112, that'd be a great time to buy. But that means a whole lot of other stocks would probably have fallen to that point too. That's the problem. You run out of money unless you have infinite money. Anyway, the next I bought today, actually, which is September 23rd. Not R, but T. AT&T. Bought at $28 flat, just for simplicity. And it almost held. 2802, 2803, 2801, boom. Million shares in 10 minutes. That got it to 27.84. AT&T's been a real stinker. So I don't like buying it, but I do like that 7% dividend. And hopefully they realize what they have in their video game section. Because, there was a story of them trying to sell their WB games, and they realized it was too profitable. So they were like, nah, we're not going to sell. So maybe they'll put some good games out. I doubt that would move the needle much for them, considering they're a $200 billion company, but who knows? Wheaton Precious Metals. That's the largest holding in the silver ETF, so that's the one I focus on. It pays decent yield. Not great, but at least you're getting something. And you get some diversity in the form of, your gold. So I think that's a good buy. But I've also been trying to, away from just buying stocks, I've been trying to get away from buying stocks in general and trying to sell some, but it's hard to sell. I hate selling them because they do so well. I don't want to sell the good ones. I want to sell the bad ones, but can't sell the bad ones. But anyway, I've been trying to buy a more broad market, get away from risky stocks, because my retirement account, which has all ETFs in it, is doing fantastic. It's up 10%, while my other one's up, 3% or whatever. So I've seen the error in my way, and I'm going to start focusing on more broad ETFs. So VT was the first. It's nice and cheap. It's got a low expense ratio, and it's diversified to hell. It's a combination of 70% the S&P 500, or possibly even VTI. 70% VTI, and 30% VXUS, which is the international. So it doesn't have the best performance, but you're getting very good diversity. And you know, the top 10 holdings has like Baba, Alibaba, and Tencent. The stuff, you know, that wouldn't come in the S&P or the VTI. So I like that. Those are stocks I don't mind holding. So VTI is the other one I was mentioning. That's the total US. It has more of the mid cap and small caps and practically the same performance as the S&P, but it's more diversified. I don't have any, well, I do, but I don't have much of that small and mid cap in my individual account, other than some of the shitty stocks I hold. So F-Tech I thought was cool. Found that online, and it does well. It's the information tech ETF, but it's actually a lower expense ratio than Vanguard, which I thought was incredible. It's like 0.8 something versus 0.10, which, you know, it doesn't make much of a difference. Or, yeah, 0.08 versus 0.1. It doesn't make much of a difference, but to me it does in my brain. But, you know, this has the usual suspects. I don't like how heavily it is into Apple and Microsoft, but that's okay. It's like 20 and 13% or something. But it does have Adobe, you know, which is one I love and I want to get, which I've never gotten. 420 is the price on that one. If you can get it for 420, go for it. Let's look at the support right there. That low right there is 420. And if it breaks that, then I would suspect it goes down to 385, 400. So even any of those would be a good buy, because I think this long-term great company. If you know anything about them, you know they charge out the wazoo for their digital stuff. So it doesn't cost them a bit to make that stuff anyway. Whoops. I sold some stocks. Dominion. I got rid of some of my. I bought the knife. I bought the falling knife right here. Got down to a low of 72. And I was buying around 74, 76. So those are the two I held. And then I bought at 79 and 70 something. And so I sold those at 81.50 or something like that. 82.50. Yeah, that sounds right. Anyway, with the whole news where they sold, you know, it was meant for a quick trade. So I'm cool holding low cost shares, because I can always sell those if I have to. But Verizon, I just, same with this. It goes towards the, I'm trying to get away from stocks and into ETFs, because VU has had much better track record than Verizon has. Well, at least the last 5 years. You know, this thing's up 32. It just trades in a range and doesn't move. And there's probably no reason why it should be so high right now, or why any stock should be up so high right now, but that's the state we're in. So I sold at 61.50, which is, you know, pretty rare. Like, you know, it's in rare company on this chart. So I still have some shares that I bought at a low price, but I'm looking to sell those a little higher or buy more at much lower. I wish I would have bought in this dip at like 52. That's a good price for it. This thing does not go down, but so if you can get it cheap, great, but this is one where you really want to buy it cheap. Anyway, I do a lot more buying than selling. It's hard to sell. Finally, McDonald's sold around 215. I thought that was just pretty fair value. You know, that's around its old high. There's no reason McDonald's should be soaring on a stock chart right now because they probably have a lot less people. I've been there, I've seen it. I haven't eaten there recently, but I ate at Wendy's and I see the ramifications. There's a lot less people there. So that's that, you know. I'm looking at Apple. I'm looking at some stocks. I'm keeping an eye on a lot of stuff. SO, looking at that at 50-50. I'm just curious of what gold does, and I'm surprised it's selling off like this right now, but we'll see what kind of rebound is. It'll hold at least 170. Nintendo is now one of my best investments. I think Nintendo and Sony are good buys. I think REITs are selling off like crazy for no reason, so I think that's another one to buy. Financials are getting low enough again to buy. I'm looking at it 55, even 55. You gotta think psychologically, people. Just buy those levels, you know. Don't bother with everything else. Ignore it until it gets close enough to your buy price and then buy it up. I mean, look how low this is. And of course, we're in a financial crisis, technically, or whatever, but who knows? Healthcare. I need the diversity right now in my retirement account, but yeah, I think 200 is a pretty fair price for that. I never bought Spotify. I was thinking 250 was a good price, but it broke down that. But I think that is still a good price. All right, well, that's the video. Thanks for watching, everybody. See you next time.